How to get entry points. Today, we're going to look at how to get entry points when it comes to cryptocurrency. You really don't want to miss this, so keep up with me till the end. Lots of trading strategies have emerged over the past decades, but they always revolve around the simple idea of buying low and selling high. But the question is, how do we spot the best moment to open a position? That will be the main theme of today's video. Crypto markets are way more volatile compared to traditional markets, which means that there are also more opportunities to gain on the price swings. But to make profit on the volatile crypto market, you should choose entry points wisely. Traders usually base their moves on either chart analysis or news events, regulation, hacks, cryptocurrency bans, forks, etc. that may trigger price jumps or drops. The chance of a successful trade is highest when technical analysis indicators meet the trigger events. If the price movements in case of news events are nearly intuitive, looking at the charts is not so much. Let's lay down the most common indicators that may help to spot an entry point. In cryptocurrency, an entry point is the moment at which a position is opened at a price that has been selected or computed in line with a cryptocurrency strategy. The ideal entrance point is one that offers minimal risk and great reward. Along a trend, against a trend, at breakouts, and at bounces are the four kinds of entry locations. An entry point may open a trade both along and against a trend, depending on the cryptocurrency method employed. Even for an experienced trader, finding an entry position in a naked chart without specific indicators is tough. It's very tough to spot a trend reversal point. One of the most common cryptocurrency trading techniques that take into consideration the strength of demand and supply in the market is trading following a trend. When there is a lot of demand in the market, the price rises, and when there is a lot of supply, the price drops. Financial instruments, whether crypto, currency stocks, commodities futures, currency pairs, or debt securities, see concentrated fluctuations as a result of these events. It's almost difficult to estimate the intensity of a trend when it's just starting off. The length of a trend is influenced by a number of basic variables on which demand and supply are dependent. In the case of an upswing, the ideal entry opportunities for cryptocurrency trading along a trend are when the price tests the channel's lower boundary, and in case of a downtrend, the channel's upper limit. In this video, we will review an indicator of each type: trend indicator, MACD, momentum indicator, RSI, volatility indicator, Bollinger Bands, and volume indicator, OBV. Technical indicators are not limited to the ones mentioned in the video, but we hope it will give you a comprehensive picture on how to catch a moment to open a position. Number 1. Trend indicator, MACD. One way to confirm the trend is via MACD, Moving Average Convergence Divergence Indicator, which is composed of the MACD line, a 26-period exponential moving average, EMA, subtracted from a 12-period EMA, and a signal line, 9-day EMA. MACD is often represented as a histogram and serves for traders to estimate how strong the trend is. When the MACD crosses the signal from above, it is a signal for traders to buy and vice versa. Number 2. Momentum indicator, RSI. Another indicator that may come handy in spotting an entry point is Relative Strength Index, RSI, calculated using the average number of periods closed up and down. The value of RSI ranges from 0 to 100, with 30 being a signal that a stock is oversold and 70 that it's overbought. The closer the return value is to 0 or 100, the stronger turnaround in price will be. You shouldn't forget that for the volatile crypto market, RSI used solely is merely enough. If you'd relied on RSI in the bullish run of 2017, you probably wouldn't have entered the market since RSI signaled it to be overbought. Number 3. Volatility indicator, Bollinger Band. A lot of traders use Bollinger Bands to spot an entry point combined together with other indicators. Bollinger Bands is a chart composed of two lines that lie a standard deviation away, positively and negatively, from a moving average line. The price crossing the lower band is considered a buying signal and vice versa, but it's best used when combined with other indicators such as RSI. Number 4. Volume Indicator (OBV). On-balance volume (OBV) is an indicator calculated as the total volume and graphically represented as a line. The indicator adds the trading volume if the previous period closed positive and subtracts the volume if the day closed negative. OBV can confirm price trends and indicate future price reversals. If the prices fall while OBV rises, it can foreshadow a price increase and may vice versa. Also, OBV moving along with price serves as a trend confirmation. One last thing to mention is that the best moment to buy is when several indicators point to a strong trend. Once you spot an entry point, don't forget to turn on your Santa bot that will execute the strategy you've set and deliver the results according to your settings. As all of you know, the right exit time is almost as important as the entry point. And there you have it. This was all about how to find entry points. Hope to see you on the next video.